Good day and welcome to our webinar for July 2024. We begin as usual in America, and you can see on your screen you should be able to see the chart of the S&P 500 with some annotations which I've put on there. As you can see on the left hand side of the screen here is the 5.5% correction which occurred in March of April this year, reaching a low point of 4967 over here in the middle of April. You'll note that the cycle high where that correction began was 5254, and of course that then becomes a resistance level, and then subsequently once it was broken over here it became a support level, and you can see how the S&P 500 did some backing and filling here, moving sideways and so on. And the support held, only just, but it did hold. And because it held, the uptrend was very strong after that. And you can see here the three hammer formations which I've identified, which occurred in a row here on the sort of 2nd, 3rd, 4th of June. And then we had a very strong upward trend. And then starting from the American public holiday, the S&P 500 has been moving sideways, but last night it broke strongly up above that sideways pattern and reached a new record high at 5509. So that's where we are now. The S&P 500 is at a new record, all-time record high. And obviously this sideways pattern is kind of a correction, but because of the strength of bullish sentiment, it's been flattened out into a sort of sideways pattern. And we do see excessive bullishness in this market. We can see it in the daily market action. But remember something, nothing in the markets moves in a straight line. So some kind of correction, again, will occur in the not too distant future. Of course, as the market goes higher, the bears, people who are bearish, bears they call them, are being eliminated. In any great bull market like this one, there will always be bears. And these are basically experts who say, okay, the top of the market is here now. They call the top of the market. So the market's going up, but they call the top and they say, okay, this is the top. You should get your money out and sit in cash. And then, of course, the market goes higher and they are discredited. But there are always plenty of bears around. and I'll talk about some of them. I've talked here are five which I've identified. Barry Bannister of Stiegel, who says that the S&P 500 will fall 13% by the end of the year. So that's his opinion. Peter Berezin of BCA Research. These are American experts, stock market experts. And he says that the indicators point to a recession. Tony Dye, who's known as Dr. Doom, and he's been predicting a crash for years. And of course, one day he will be right. But when? That's the question. And then Russell Clark, who's a hedge fund manager, had to shut his fund because of the losses he made going short in expectation of a downward trend. Marko Kolanovic, who's with JP Morgan, is expecting the S&P 500 to fall by 25% by the year end. And there are others. And as the market goes higher, and people who follow their advice lose money because they sold out, they lose credibility and they are relegated to the scrap heap of bears. And this process I call the elimination of the bears. But while there are still plenty of bears around, you can be probably pretty sure that the market is going to continue going up. That's what I've noticed. But eventually we will reach a point where nobody dares to call the top of the market because so many people have been basically destroyed as a result. And when you get to that point where there are no bears, that of course is the point where you should start to be concerned. That is the point where you should start to move quietly back into cash. All right, let's look at the US markets, the economy. Inflation still looking good. The consumer price index was flat again in May, up 2.6% on the year, and core PCE, which is the Fed's favorite indicator, which excludes food and fuel, of course, was up 0.1% in May, and again up 2.6% on the year. This is pretty much in line with economists' expectations, and of course it's on track to reach the Fed's goal of getting inflation down to 2%. So the market is now fairly confident that there will be a rate cut in September. In fact, there's about a 64% probability of a rate cut in September, according to the market. This perception, of course, is driving the market higher, and the S&P is breaking to new record highs. In the first 6 months of 2024, the S&P 500 is up 14.5%, led, of course, by the NASDAQ, which is tech-heavy, and that's up 18%. Just in the first half of this year, Nvidia is up 156%. That's quite astounding. Of course, there have been rate cuts in Canada, in Sweden, in Switzerland, and in the European Union. These are early signs that the interest rate cycle is turning, and rates are going to start falling. The direction of the trend seems to be clear. There's certainly no more talk about interest rates going further up, and the inflation metrics worldwide are starting to improve. This, of course, will benefit all equity markets around the world, including the JSE. Lower interest rates basically mean higher corporate profits, and higher corporate profits mean higher share prices. South African interest rates are in lockstep with the US, and this is because we need to keep our bonds attractive to overseas investors. Okay, looking at the jobs market in America, non-farm payrolls increased by 270,000 in May month. So that means the American economy created 270,000 new jobs in May month alone. This was 50% above economists' expectations and well above April's figure of 165,000. The unemployment rate also increased slightly to 4% from April's 3.9%. But to us, it looks like the labor market is still very strong, despite the high level of interest rates. The consumer price index came in at 0.3% in April month and 3.4% for the year, slightly better than March's 3.5% and more or less in line with expectations. Inflation is proving to be a bit sticky at these lower levels. The CPI has been stuck between 3 and 4% for more than a year now. The Monetary Policy Committee, of course, is on the horns of a dilemma, as they usually are. Keeping interest rates unchanged risks a recession. Lowering them too soon risks a renewed bout of inflation. But one point is clear. The boom in the US economy is likely to continue, certainly to the end of this year. This, of course, is good for Biden's re-election campaign, although his poor performance in the debate recently has damaged his prospects. And of course, the decision which just came out from the Supreme Court in America, which effectively gives the president unlimited power and makes him immune to criminal prosecution, is a huge blow to democracy worldwide. But ironically, I think it will not help Donald Trump in the election in November. I think it's actually going to work against him, because Americans now realize that in order to prevent their country from moving to a dictatorship, they basically have to vote against Donald Trump. And of course, the best hope is that Trump continues to shoot himself in the foot, which he seems to do quite regularly. We believe that it's quite possible that Trump will agree to a second debate with Biden, and that, of course, will be a mistake. I think that Biden will do far better in the second debate than he did in the first. All right, let's look at the oil price. Oil, of course, is critical to everything and very important in America as well as here in South Africa. And here you can see the oil price, and from this cycle low here at $77 a barrel, which occurred in early June, we've seen the oil price rising for the most of June month. And there you can see we are up here at a kind of a level of around $86 a barrel. So that's obviously not good for inflation in America or here or anywhere in the world. And it's not good for growth either. Much of this upward trend has been caused by tensions in the Middle East between Israel and Hezbollah. The fear is that they are moving towards an all-out war. That would, of course, impact on oil supplies from the Middle East. Of course, a rising oil price is also good for Russia in its fight against Ukraine. So just turning our attention to Ukraine now for a moment. The resumption of support from America is swinging the war in Ukraine's favor. The flow of ammunition has resumed, and it is displacing the Russian artillery dominance. The permissions given for Ukraine to use the American ATACMS system to target things inside Russia is a major step forward. The Ukrainians are hammering the Russians inside their own territory, which prevents them from building up troops for an offensive. The Russian summer offensive and their push towards Kharkiv has now failed quite consummately, and Ukraine is starting to regain territory again. The Russian Black Sea Fleet has been decimated and pushed right back. The Ukrainian drone technology is striking oil targets far inside Russia, and Ukraine is developing drones which destroy other drones. This is a new development in the war there. It's a new milestone in drone wars. Crimean air defenses have been virtually destroyed, making it almost untenable for Russia to keep that peninsula. On the 10th of June, a number of S-300 and S-400 defense systems, air defense systems in Crimea were destroyed using ATACMS missiles, and also an S-500 Prometheus system was also destroyed. The Kerch Bridge is a prime target and now is open to attack. Of course, retaining control of Crimea is vital for Putin's political survival, and the failure of the S-300, 400 and 500 air defense systems is a major problem for Russia. Russia generally now is very vulnerable to NATO weapons. All right, let's look at the South African political situation. 9 months ago in the in the confidential report, I said the following. In our view, the ANC will probably get about 40% of the vote next year and will thus be forced to compromise with one of the other parties, probably the DA. Such a coalition will be uncomfortable for both parties, but may see improvements in the management of some key sectors of the economy if the DA becomes more influential. And basically, we said that 9 months ago, and that is almost exactly what has happened. The Government of National Unity appears to be forming gradually. We have cabinet positions in place, and our faith in the South African voting public has been more than vindicated. From the poorest squatter to the richest businessman in South Africa, the message is clear to the government. Corruption is unacceptable. The ANC's role in destroying apartheid no longer guarantees them success at the ballot box. The DA represents first world honesty and administrative excellence. Extremism, populism, and nationalization are not wanted. All race groups are seen to be essential in the future growth of South Africa. So those 5 points seem to have come home from this election. That is what the electorate is saying to those people in power. It's now clear that South Africa's constitutional democracy is working well. The elections had almost no violence and were accepted as free and fair both internally inside South Africa and by external observers. This, of course, separates South Africa from other emerging economies and BRICS countries. It also separates South Africa from America, where the elections are constantly being contested and questioned. All these outcomes are critical for South Africa and our reputation with international investors. But the ANC-DA coalition will not be smooth sailing. They have been at each other's throats for 30 years. It will be difficult for the ANC to give up absolute power because they have had it for 30 years. Both of them, however, have demonstrated the ability to reach compromises, and the electorate has insisted that they must now work together. Appointments must be based on experience and capability. South Africa must become a meritocracy. The best person should get the job irrespective of his or her color or politics. Operation Vulindlela, started by President Ramaphosa in 2020, is now vital. It has had a huge impact on the electricity supply in this country, and basically it has ended load shedding. It is now focused on rail logistics and port infrastructure, where we have another major problem. After that, another major project may be for it to turn its attention to municipalities around the country which have failed consummately, and especially in service delivery. Perhaps the biggest challenge for the Government of National Unity is the government debt. South Africa is now paying about 20% of all tax collected in interest on the national debt, just in the interest. Expenses will have to be very carefully managed, and there will be little or no money for feel-good projects. Compromises will have to be made, and of course the world is watching. Finance Minister Godongwana's continuation is obviously critical, and the independence of the Reserve Bank is also critical. Despite this, there is an enormous potential now for public-private partnerships, and we expect these to have a major impact on the rebuilding of the South African economy. In South Africa, every 1% of growth in GDP results in 0.67% improvement in the unemployment rate. So if growth goes up by 1%, the unemployment rate improves by 0.67%. This shows that only the private sector can really create jobs in the long term. In 2010, the economy went into decline. The average GDP per person dropped from $8,200 per annum to $6,200 per annum, as it is now. The hope is that the Government of National Unity can reverse that decline. The danger, of course, is that the Government of National Unity is not sufficiently stable to execute on these promises. Looking at the Rand, the strength of the Rand, of course, is a function of two things. First of all, the international perception of South Africa's political stability. And secondly, the recent significant international shift towards risk on. The ANC-DA accord is vital. The Rand strengthened by weakened by 50 cents to the US dollar when that accord was in jeopardy. The resolution has seen the Rand recover almost all that lost ground. But at the same time, Wall Street's record highs encourage investors to buy South African bonds. They are very cheap and offer an excellent return. We believe that the Rand is winning both locally and internationally. The danger is that the GNU or Wall Street collapse. We believe that investment dollars are now going to pour into South Africa because of political stability, and also because of the risk-on sentiment, which has become a feature of international markets. And that, of course, we saw earlier when we saw the S&P 500 rising last night to a new all-time record high. Okay, turning our attention to the South African economy, the positive outcome of the election substantially reduces risk in the South African economy. Standard Bank says that this means that interest rates will be cut by 225 basis point cuts by the end of this year. This is in line with rates expectations also in America. Falling interest rates mean higher profits, as we said earlier, and that leads to higher share prices. The JSE is already following other markets up to new record highs. The Reserve Bank expects inflation to return to the midpoint of the target range, which would be 4.5% in the second quarter of 2025. GDP, gross domestic product, fell by 0.1% in the first quarter after growth of 0.3% in the fourth quarter of 2024. The only positive sector was agriculture, which was up 13.5%. The second quarter is expected to be better, mainly because there is no load shedding. Growth for 2024 as a whole is now expected to be around 1%. Of course, this is far too little to even absorb the school leavers who are entering the market. Hopefully, the new government of national unity will improve employment prospects in South Africa, especially with Minister Godongwana staying on as finance minister. And of course, the DA has appointed a deputy minister for the Ministry of Finance, so that's also positive. The debt consolidation program is expected to continue. South Africa lost 67,000 jobs in the first quarter of this year. Full-time jobs fell by 29,000 and part-time jobs fell by 38,000. Salaries and wages were 0.8% lower in the quarter, but over the year they were up 5%. Christmas bonuses fell by 25% at the end of 2023 because of lower spending. Over the year, though, to the end of March, bonuses were up 0.5%. A major aspect of the Government of National Unity is the Vulindlela program. The Bureau for Economic Research says continuing Vulindlela will improve growth prospects. It should result in improvements in many areas, especially Transnet. Port and rail management will be handled by the private sector. In a world rating of the 400 ports around the world, Cape Town was the worst, and Durban was at 398 out of 400. So our ports are not doing well. And hopefully that can be improved. Of course, the price of petrol fell last month by R1.25 per litre and is expected to fall by another R1 this month. That is welcome relief for consumers who are facing very high interest rates. Businesses, of course, will also benefit from lower transport costs. But as you've seen, and what you've got on your screen shows that the price of oil, Brent crude oil, is rising again, and that could become a problem. The Afrimat Construction Index shows that activity was down in the first quarter, mainly due to the high level of interest rates and, of course, uncertainty about the election outcome. The number of building plans passed fell 23%. Construction, of course, is a major employer. But with the certainty of the growth of the Government of National Unity now in place, we see a surge in new plans being passed. Agriculture has always been a critical component of the South African economy, mainly because millions of people rely on growing a few acres of mealies for food. The El Niño weather phenomena brought drought this year, and that had a big impact on summer grain and oilseed production. Combined with Transnet's problems and the disease in certain groups of animals, this has been a problem. Despite all of this, however, agricultural exports rose by 6% in the first quarter. A recent United Nations report says that 23% of South African children are malnourished. In other words, they're in starvation. This is obviously a severe indictment on the ANC after 30 years of rule. And it is a result of the high unemployment rate above 30%. It goes a long way towards explaining the ANC's very poor election result. All right, let's turn our attention now to some international things. I just want to have a quick look at Bitcoin. I know that some of you are interested in Bitcoin and you get involved in it, so I thought I'd just do a little bit of an analysis here. In our confidential report on the 1st of May, we pointed out that Bitcoin had made a double top. You can see those two tops there, 1 and 2. 3 weeks later, it made a third top over here. So then we had what is known as a descending triple top, which is probably the most negative charting formation you can get, a descending triple top. You see that? And we tweeted about this on the 24th of May and pointed out this descending triple top. And since then, the market has been trending down, formed a little island over here. I don't know if that island will prove to be a turning point. But our advice on Bitcoin remains the same as it has always been. If you have them, sell them. If you don't have them, don't buy them. All right, now I'd just like to spend a little bit of time talking about one of the indicators which is available to you in your software. It's called the CRSI, or Comparative Relative Strength Index. It's not to be confused with the Wells-Wilder Relative Strength Index, okay? So this is the comparative relative strength. It's one of the best indicators in your software. The way it works is very simple. It divides one data stream by another and draws a chart of the result. So, for example, you can divide the S&P 500 by the JSE Overall Index and draw a chart of the result. I've done some of these in Word for you. So that one that I'm talking about, you can see now on your screen here. See if I can make that a bit bigger. I can't really. Maybe this way I can. Okay, what you see here is the S&P 500 divided by the JSE Overall Index. So when this chart is going down, it means the S&P 500 is underperforming the JSE Overall Index. When it goes up, the opposite is happening. So you can see here, this is COVID-19 back in 2020. And then more recently, this shows how the S&P 500 has been underperforming the JSE over this period, but reached a turning point here. And since then, it's been outperforming the JSE. So that's one of the main uses of this relative strength chart, okay? And remember, you can take any two data streams in your database and compare one with the other by using a comparative relative strength. And by doing that, you can establish some very interesting relationships. Okay, looking at another example of exactly the same thing, this is the gold price in rands against the Krugerrand price. So what it is, we take the Krugerrand, the price of a Krugerrand, and we divide it by the gold price. Now you would think that the two would be pretty much in line, right? You would think that the price of 1 ounce of gold in rands should be pretty much in line with the price of a 1 ounce Krugerrand, right? It should be. Of course, the Krugerrand will be trading for slightly more than the price of gold because it's in a very tradable form. It's in coin form that can be traded and transported overseas and so forth. So it does have slightly more value than simply 1 ounce of gold because you've got it in a transportable, tradable form. But having said that, you can see on this chart, you see this line here, this horizontal line at 1 to 1. That shows you where the gold price and the Krugerrand were exactly the same. But what's interesting is to notice that here on the 29th of November 2019, the Krugerrand was actually 13% higher than the rand price of gold. There you can see that. And conversely here, over here on the 15th of March 2024, the Krugerrand was trading for 94% of the gold price. So it was actually well below the gold price at that point. You can see how important this analysis is if you are thinking of either buying or selling Krugerrands. So that's another use of the comparative relative strength index. You can use the CRSI to compare any two data streams in the market. One of the most interesting things you can do with the CRSI is to put a share into another currency. So, for example, if you divide the price of, let's say you divide the price of Capitec Bank and you divide it by the US dollar rand exchange rate. Then you will get Capitec, a chart of Capitec shares in US dollars. Or you might say you want to see the Capitec share price in Krugerrands. So then you divide the Capitec share price by the Krugerrand. And then you'll see the impact, or what is happening to the Capitec share price, but in Krugerrands, not in rands. So these show you some very, very interesting points of analysis. And I just wanted to take that time there to just explain to you the CRSI, and I hope that some of you will use it to find interesting looking opportunities in the market. All right, now I'd like to just turn attention to some of the companies in the market, and I want to start off with RCL. Let me just get this back on track here. RCL. This, of course, is the company that has just unbundled Rainbow Chicken. Okay, so here we have RCL's share price on the screen. So the top chart is a simple candlestick chart, and here you can see there's a trend line right on this chart. The unbundling was announced here on the 4th of June, and immediately, but what is interesting to notice here is that before that date of the 4th of June, there was a massive increase in the volume traded and the share price ticked up. So that is a sign of insider trading. In other words, the public on these days over here, the public did not know about the unbundling of Rainbow. But the share was trading massive volumes. If we go back to the day before the 29th of February, then the average volume changing hands on that day was about 52,000 shares per day on average. Then on the 29th, we had 3.6 million shares traded. 36 million shares traded. 36.4 million shares traded on that single day. And of course, that was the 29th of February, and the announcement on the Stock Exchange News Service was only made on the 4th of June, so a few days later. I draw this to your attention because, you know, this type of insider trading goes on in the stock market all the time, and there's nothing really that can be done to stop it, because the people who do this type of trading don't obviously do it in their own name. They do it through the uncle in Bloemfontein or whatever, you know, but somebody who's not going to be directly linked back to them, because of course insider trading is illegal. But it goes on. It goes on, and they can't hide it from you because you can see it in the volume chart, and you can see it in the on-balance volume signals. Okay, so that just shows you. And then of course the share price did go up quite strongly there, but we added it to the winning shares list over here because it broke above this long-term downward trend line. We added it on the 1st of May at 1,050 cents. And then it went up very, very strongly. And of course, on this day over here, which was the 26th or 25th, 26th of June, the Rainbow shares were separately listed and unbundled. And of course, the share price came off. But if you look at it, if you look at the whole pattern, if you had bought the shares here when they were added to the winning shares list at 1,050 cents, you would have made a profit of about 40% in 2 months, because obviously you would have got a Rainbow share unbundled, and those Rainbow shares were trading for, I think, 369 cents the other day. So it made roughly a 40% profit in 2 months. All right, now I'd like to just look at Murray & Roberts. Murray & Roberts is a company that used to be one of the largest construction companies in South Africa. And this company, in fact, at one point, back in October 2007, this share traded for 108 Rand a share and had the company had a market capitalization of 360 billion Rand. It was one of South Africa's biggest construction companies, and it was an institutional favorite and a blue chip share. Then it fell from that point, and on the 31st of August this year, right over here on the chart, the share reached 58 cents. So it fell from 108 Rand to 58 cents. And you can see at this bottom area here, we had an island formation, what's called an island formation. So it was 58 cents there. It was also 58 cents here on the 7th of December intraday, right? After that, it started to improve. And the main catalyst for this improvement was the fact that the company sold one of its companies, one of its businesses, and recapitalized. It was able to reduce its debt. So debt is a major factor in company risk. So when you're looking at a share, one of the things that you've got to look at is how much debt is the company carrying. Companies which have got too much debt are susceptible to high interest rates, and of course they have no what's called headroom. They can't grow organically or by acquisition because they have no headroom on their balance sheet. So now from that point the share started to recover, and you see it broke above this island here, and we added it to the winning shares list here at 106 cents. It has subsequently moved up to, what is it now, 224 cents. So it's more than doubled from this point where we added it in December last year. Doubled to this level here. So in about 7 months it's doubled its price. Okay, so that's Murray and Roberts. And then the last share I want to just talk about now is Nampak. Nampak, obviously a huge international packaging company. And here you can see that this company also had a major debt problem, and they sold off their business in Nigeria called Bevcan Nigeria for $68.5 million here with the red arrows, and the share started to perform better then. We added it to the winning shares list over here on this day, the 20th of June, and it was then trading for 228 Rand. Subsequently, Nampak has moved up to its closing price yesterday at 319 Rand 20. That is a gain of about 40% in 2 weeks. We believe that Nampak will continue to perform well. Okay, folks, that's what I've got for you today. And you're welcome to go down and look at the comments below the video here and add your comment. If you've got a question or something like that, you can add it down there, and I'll try and answer it as quickly as possible. Otherwise, I'd just like to say thank you for listening to me, and I hope that you found something of value in this presentation. And remember that you can contact me as well. I'm on WhatsApp, I'm on the phone. You can call me. My number is 071 5022 383. You can phone me or WhatsApp me on that number, and we can chat about the market. Thank you for listening to me, and I'll talk to you again next month on the first Wednesday in August. Thank you.